All right, good morning. I'm here with Nima Ghamsari, the founder and CEO of Blend. Nima, tell me a little bit about what is Blend, what is the business model, and who are your customers?
So Blend is, hi, I'm Nima, everyone. Thanks for having me. Blend is a software provider that makes the process of getting a mortgage simpler, more transparent for consumers. And the reason we're here is as a result of that, there's many aspects to the process. There's the part that you work on with the lender. There's the part that you work on with the title insurance agent, which is something that was talked about earlier. But there's also a home insurance part. And last year, Blend launched a home insurance agency to work with carriers to offer consumers insurance at the point of that mortgage.
Great. And so tell me a little bit about, let's start at the beginning. You're getting into the insurance market, but mortgages is kind of what made you guys big. You're one of the biggest players in this burgeoning digital mortgage arena. So who are your customers and what are you doing for them? How are you serving them?
Sure. So yeah, we started the company. I think one of the realizations that I had, I left college. I was a computer science grad. One of the realizations I had was that, I was working at Palantir right after college. During that time, I realized that pretty much everything done in financial services was still done in paper and possibly often with the guy down the street or the gal down the street. And it was like this very much like this culture of manual and analog processes. And it was because, and I think for a good reason, financial services, a lot of the decisions people are making about their financial lives are super important, and so they want that personal touch. But it meant that I think people didn't invest as much in the technology side of it and made the technical aspects of the transactions very complex and very high friction. And so I left and started Blend in 2012 to make, basically I thought we could make this a frictionless transaction. There's enough data about consumers' financial lives out there that the consumers can provide. There's enough technical capabilities in cloud infrastructure and just even mobile and digital things that most other industries I think take for granted now. This industry, financial services, did not really, and insurance did not really take for granted, and I think was not really embedded in part of that. And part of the reason for that was that people weren't leaving computer science programs from Stanford and MIT and going to go start software companies to serve financial services to become infrastructure. It's just not something that was top of mind for people because it's not something that people really understood. I didn't understand it. I hadn't gotten a mortgage or I hadn't gotten a large personal loan, or maybe I had a checking account and a credit card, but that was really it, leaving college, and a student loan. And so I think it was one thing that I didn't fully understand. And so when I finally understood how big it was and how important it was something that got me really excited.
Great. So now you have, you count among your customers some of the biggest banks in the world, Wells Fargo, U.S. Bank. I mean, what, is it more than 130 lenders now?
Yeah, we have about 150 banks as our customers. Okay. We do about $2 billion a day in mortgage transactions. So, to put that in perspective, I think that's like the industry at large is probably, I don't know, somewhere less than 10 billion a day in transactions. So we end up seeing a lot of the flow or powering a lot of the flow. And the way our product works is a consumer goes in, when they click apply now on that lender's website, from then on it's our experience. So we tie it all together for the consumer. Internally, we have the team members of the bank also on our system to help guide the consumer when they want that personalized touch. But we want to be the system that makes it truly one tap and frictionless for consumers who are going through that process.
Take me through the inflection point. When did this product start resonating? When did you really start to get traction? I know there's obviously some cyclical trends going on in the mortgage lending business. Is there a point that stands out to you?
I think 5 years ago, most financial services institutions were really keen on proprietary technology. How do I build things myself? How do I build things that only I can use and my competitors can't use? And then I think in 2015 or so, there was some combination of trends that really hit that made us, I think, more successful. Quicken launched its Rocket Loans, Rocket Mortgage product, which is something they've done a lot of advertising around. It's gotten a lot of consumer attention around push button get mortgage. There's been a rise of fintechs who have been tackling this space from truly a disruptor space, like Chime and SoFi and Robinhood, and you see those companies and I think a lot of what people are saying is speed is what really matters. And I think as soon as that mindset shifted from proprietary nature of technology matters and to speed is what matters, that's when technology providers like us, we're an accelerator. That's when we started to become a core part of the infrastructure for a lot of the financial institutions.
Great. And what's growth like right now for you in that business?
Business is really good. I think we work with a lot of fintechs now, which is also really cool, where we're powering their mortgage and in some cases their home insurance experience. It turns out that fintechs have similar trade-off challenges around what to build and what not to build as big banks do, and in some cases they just have better access to talent, but even that talent's probably better put on things that don't already exist. If you've already built this infrastructure, then why go build it yourself again and make it just as good, one tap, but not any better? There's no real benefit, there's no real proprietary value for that. And so, but we work with, we've probably doubled our revenue, we're doubled our team size, we've grown every year, about 400 people now in San Francisco and New York, and continue to expand our presence. And the other thing we're expanding is not just our presence within the home buying experience, but also the other financial products that consumers might get, where if they want to get a car, how do we power that car buying experience every end to end from the car loan to the insurance to the warranty, anything that they need as part of that process? How do we create a similar cohesive experience for that?
Okay, and so last year you make a pretty big announcement. You're getting into the homeowners insurance market. Take me through that. Why was that a natural progression for you guys?
Well, one of the items on the checklist for 100% of mortgages in America is homeowners insurance. You have to get homeowners insurance to get a mortgage. And it was mostly, people were calling the person down the street and saying, hey, I need to get homeowners insurance. Or they were forgetting and they were showing up at the closing table and they didn't have homeowners insurance. Or they were getting a rate that wasn't as good because they didn't know how to shop around or ask the right questions in the process, or the right amount of coverage and the right amount of education. And so what our lenders, I think one trend I'm seeing maybe across lenders is there was this great moment of unbundling maybe 5 years ago. Now I see this bundling where lenders are saying, or banks are saying, if we can bring together these experiences into a cohesive experience, then it'll serve the consumer even better. And so our banks pushed us in that direction, consumer need pushed in that direction. So we started the homeowners insurance agency maybe a year ago, a little less than a year ago. And the idea is, as a consumer is going through the mortgage process, one of the items in the checklist is bring your homeowners insurance. And of course, the consumer can bring their own. If they want to bring their own, if they have a person already they do insurance work with, or a company, bring your own. And if they don't, we instantly present them with a few options that are tailored to their geography, to their specific financial situation. We have a lot of the data around the consumer because they applied for the mortgage through our system, and it's in the same flow. And so the data can be transmitted pretty seamlessly, and so that now we can present them with a personalized set of options instantly in one tap, in a way that historically I think would have been a much more complex process for them. And so that's been exciting for us. I've seen other companies in the space that are not in the mortgage space, like Fair, who I think is speaking tomorrow, is doing a similar thing where they bundle the car buying with the insurance and maybe the loan, other aspects of it. And so I do see that as something that it makes a lot of sense to bring those experiences together for the consumers. And it doesn't seem like a big thing, but it has the potential to really change the way that this industry and banking, which are two industries that intersect a lot, how they operate together in the long run.
Yeah, and so one of your insights with the mortgage was kind of eliminating paper, eliminating human error. And so how similar is the homeowners insurance business to the mortgage approval process?
Well, a lot of the data for getting a homeowners insurance policy is the same data that you would get a mortgage with. And so if you're a customer and you go through and get a mortgage, when you go get a homeowners insurance policy, they're going to maybe pull your credit, and they're going to pull information about your property. For us, by bundling these things together, allowing the consumer, if they want to take advantage of that together, we make it one click and we show them a few options. We don't actually offer our own insurance product in the tradition. We're not a carrier. We don't have our own insurance product. Asaf, who's speaking next from Hippo, they have a product that they offer that's a new product, that's a delightful product for the home insurance space. We're offering a product that is more like we personalize a few options for them in real time. We're more of a concierge for the consumer than we are offering a new type of product.
Got it. So take me through the process. I'm applying for a home, God willing, one day, and I'm using one of the lenders that you guys are a provider for. So at what stage am I getting hit with an option to get insurance through you guys, and how does it look like?
Yeah. So the simplified version of the home buying journey is something like Alex, you decide you want to go for a home, the first thing you're going to find out is, well, what kind of home can I afford with my salary and my partner's salary and my assets, whatever, all the things that I have. And so the first thing you'll find is when you go to an institution that offers a mortgage is we'll help you find your buying power instantly. So how do we give you a one-tap access to, here's what you're pre-approved for, fully verified. One thing that Blend does differently is we use data instead of documents, and so we don't require humans to go and read that paper. It seems obvious for other parts of the world, but mostly this world has still been built on documents. And so we'll offer you your buying power instantly. You'll go and you'll shop for a home, go to a couple open houses, maybe find one you like. You want to make an offer, you get your pre-approval letter from our system, give the offer to that real estate agent, and then once they accept your offer, you'll come back and you'll give what's called intent to proceed, which is sort of an important moment in the mortgage process where now you're giving the institution knowledge that you want to move forward with your mortgage. And at that point, it's countdown to closing. And so that's the point where we'll present a bunch of things to you, which is documents to view and sign around your mortgage, but also, and including your rate and things like that, but also we'll ask you for your homeowner's insurance, and that's where we'll present these few options for you. And other parts of the process will kick off the title process, we'll kick off the appraisal process, and other parts of the process that are really necessary to get a mortgage done we'll do as well. But the homeowner's insurance would be right then.
Okay. And so you can see how this is an advantage to customers. What about the insurers? What is your big pitch to them? Why should they offer their home policies through a platform like Blend?
Well, I think one, we do a lot of volume today. Not all of we're not offering insurance on all of it yet. We're sort of working with our partners, our bank partners over time. And so, but I think the fact that we can offer not just the flow and the sheer number of consumers who are at this point of need, this point of intent, but we can also offer the institutions that wealth of data that otherwise they would have to go and chase down, I think, whether it's documents or whatever. I think we can offer that information, and hopefully eventually, my hope is over time the products become even more personalized and more specific to that specific consumer's both financial situation and their housing situation. By using this data, we're not innovating on the products, but we're not building a product ourselves. And so I think these two things together are a pretty compelling proposition for most of our insurance counterparts.
Okay. And so you've got other lines of business, other frontiers you're expanding into, home equity lines of credit, deposit accounts. So how has your position in mortgage first, staking your flag in there, how has that kind of helped you get into position to branch out into these other products?
Well, I think one trend in startups that I've seen recently is that there's this intense customer focus of startups. And I'm similar. I was mentioning to Alex that I've been in probably 10 cities in 10 days with our customers, ranging from Arkansas to Dallas to wherever I need to be, St. Louis, Minnesota, Des Moines. And I think it's super important. I can't overstate the importance of being customer focused for startups. For those of you who are starting startups, I think it's just something that I didn't really fully understand and appreciate until really getting deep into it with Blend, but being really customer focused. And so when we got in there and we were really successful with a mortgage, I was with a bank last week in Chicago, and they told me that their mortgage project was the most successful project that they had ever done as a bank, in terms of technology project. And so that's the kind of success that I want to have, and then that's the kind of success that breeds them to come back to us and say, hey, can you do my home equity business and my auto business and my credit card business? And that's what we were there talking about, is all these other lines of business that, frankly, it's a lot about underwriting the consumer in real time. It's a lot about providing that digital experience in real time, providing that internal branch experience as well if needed, and then the other pieces to the puzzle. But we wanted to be pole position for those products, and the only way to do that was for us to be truly obsessed about our customers and what they cared about, which is the consumer, because they care about their customers, sort of transitively. And so us doing that made it so that we were first in line and had sort of not right of first refusal, but feeling like we had the first swing at any other product line or interesting area that we wanted to solve in the technical stack of financial services.
So we're seeing a lot of headwinds in the mortgage industry, small and mid-sized banks especially. They don't quite have the budgets that a JP Morgan that's spending $11.5 billion this year in technology does. or even a Citi or Wells Fargo. So with that said, what are some of the best and worst strategies you're seeing among the small and mid-sized lenders in terms of reckoning with or incorporating and partnering with fintech?
Well, I think small and mid-sized lenders have sort of worst of both worlds, where they're just as regulated, have just as much work to do in some cases, not just as regulated, but they're very regulated, they have just as much work to do, and yet most tech companies were not built as a truly software as a service model that could serve them, and so they have to either use things that were built from legacy tech providers or not use anything at all and just use paper. And they also can't afford to build high value experiences for their customers in the same way that big banks can. And so I found some of the small and mid-sized ones have been some of the most eager to partner, because it allows us to get them accelerated in ways that they otherwise couldn't work. They couldn't work fast enough if they were going to build these things themselves. But even the big ones, I think what surprised me is I just assumed that none of the larger financial institutions would want to work with us. But I think there's two reasons I do. I think one is speed is king. Mm-hmm. And so large financial institutions, anything they don't have to build means that they can focus their energy on something else. And so they'll work with us on our part of the pie, and then they'll build around it, or they build another piece of the bank in parallel. And the other thing is talent. Another sort of learning I had was don't skimp on the talent, especially the technical talent. If you're a technology company, if you're truly a technology company and not a financial services company that has a technical interface to it, then don't skimp on the talent. I think the talent is something that the people are so hard to attract into this space, and we have to create great cultures for them to want to work and understand the impact of what they're doing, so they want to do more of it. And it's really hard. I think large financial institutions have, especially nowadays, I think there's a little bit less trust than there used to be of large financial institutions just because of recent news. And so how do we make it so that consumers of these products who historically wouldn't have wanted to go into the space from a technology perspective will be open to going to a company like Blend or the next fintech company? And so really getting talent's really hard, and don't skimp on it. I mean, don't outsource it. Don't send it to a different company to build. Your core tech team. I think build some of that yourself so that you can eventually, create a moat around that.
How big do you think the insurance product can get for you guys? 3 to 5 years out, let's say.
Well, I mean, I think home insurance is such a big need in the mortgage process. Every consumer needs it. Every time somebody buys a new home, they need a home insurance policy. And we're right there where the consumer needs it. So I wouldn't be surprised if we're one of the largest providers of home insurance in the country in a few years, just because we're the largest provider of, I think, digital, mortgage experiences in the country. I think I wouldn't be surprised if we're the largest home insurance provider in the country. Now, indirectly, it's not our product itself, but we're the sort of the provider of that product. But that's pretty exciting. I think that that gives us a great foundation for us to continue to raise the bar for the experience and the quality of product that's served to the customer if we do that.
Okay, and then big picture for Blend, is there an IPO on the horizon? Where do you guys see yourselves going from here?
I think, we're probably 1 year out from being maybe IPO ready. The company's grown a lot, like I mentioned, both revenue in terms and customers, people, product lines. I think we're a pretty well situated company from that perspective. On the flip side, private markets are for capital, at least right now, knock on wood, are pretty good. And there's a really strong secondary market for employees, and in some cases those things can be even facilitated by the company. And so to the extent that people need liquidity, which everyone has life needs, we're talking about getting mortgages, for example. It's something that the common reason people want liquidity from companies they work with that are private. And so I guess one thing that I struggle with is we're in this market that's so big, financial services that's so big, and it's going to completely change. Right now it's mostly paper, and it's mostly the person down the street who's doing the referral, and it's going to completely change, I think, to be this really digital, very automated, simple, transparent, one-tap world that a lot of other industries are. And we're really well positioned to solve it. And I think what I really don't want to do is compromise our ability to be able to go and invest heavily. One thing that you probably all know this, but financial services institutions, especially larger ones, are relatively slow moving. Like they are very deliberate in how they work. They have a lot of risk appetite or risk things they have to mitigate, and they have a lot of desire to solve these problems, but they have a lot of competing priorities. And so because the industry is relatively deliberate, we have to make huge capital investments upfront in building and R&D well before revenue comes into those things. And so that ends up looking bad on an IPO balance sheet. It's something that I don't want to have to think about if I know it's the right thing to do for our company and for the industry and for the consumers. And so anyways, it's something I struggle with a lot. I don't have an answer for you, but I think we'll probably be IPO ready maybe in a year or so.
Okay. Let's play the game. Everybody's been playing the game. I'm sure you're familiar by now. It's called Overrated, Underrated. First thing we have, Quicken Loans.
I think underrated.
Why?
I think Quicken Loans. Well, I think the thing, when you're in a space that there hasn't been a ton of innovation in for a long time, and then Quicken Loans comes in and starts driving innovation, I got to give them props. It's a really hard space to innovate in. Heavily regulated, a lot of headwinds when you're a company in this space, and so, have they fulfilled everything that they want to do? Not yet, but neither have we. But at the same time, they're pushing hard, and they're getting awareness to consumers, and so I think probably underrated.
Okay. Next, Wells Fargo.
It's a tough one. Look, they're a partner of ours, and
Yeah.
and I think I get to work with a lot of the people who are at Wells Fargo who are humans, and I get to hear their perspectives on these things. Nobody I work with at those levels nobody at any institution I work with at those levels is as customer focused as the people I work with at Wells Fargo. Seriously. They're so customer focused, and I'm as a startup who's obsessed with the customer. It is something that really means a lot to me, and our alignment on customer first and customer focus matters. Now that being said, I don't know everybody at the bank, and I think that there's historical things that are being shored up now. But I can tell you, the people I work with, the humans I work with on a day-to-day basis, truly care about the customer, truly, and that's really meaningful to me.
Home equity lines of credit, HELOCs.
Probably underrated. And I think the reason it's underrated is because it's if done responsibly, is one of the cheapest forms of capital that a consumer can get. And in terms of when you're talking about money, there's only one kind of money, and you want the cheapest kind of money usually, like as long as it's not something that has weird terms that would make you eventually. And so to the extent that it was very low friction to get a home equity line of credit, like what Figure's trying to do, what we're trying to do, if we can make it a truly low friction thing for consumers to get in there and in 5-10 minutes know what they can take out and then be able to, within 48 hours, have the money in their bank account, I think that's a really powerful proposition for somebody who wants to do a renovation. Like, don't go out and put money on your credit cards at home. Like, don't revolve money on your credit cards.
Sure.
Don't take out a personal loan at a 15% interest rate if you can have a 5% interest rate home equity line of credit. And so I think there's real power in it. I don't think it's been unlocked yet.
Okay. Palantir. Your former workplace.
Former employer. Also underrated. And actually Palantir is underrated because I think they have I think that they, in some cases, they've also had things in history that have not been perfect, but they want to solve really big problems. And creating value in the world, every company I know that's a for-profit company that's trying to create things, their first focus should be creating things of value in the world, because if you create things of value, the revenue and all those other things will follow. Also, people want to work with you to create that value. It creates a mission-oriented culture. And those are things that Palantir was really good at that I was able to take and make part of Blend's DNA.
Great. Last but not least, you're from the Bay Area. Overrated, underrated, the Golden State Warriors.
Oh, so underrated. They're so underrated. And I think the thing about the Golden State Warriors is that they're fighting through adversity that, they went from David to Goliath, and now everyone sort of is rooting against them, it seems. But, I think they're going to pull it off. They're going to win again this year.
They're winning in Game 7. You heard it here first.
Winning Game 7 in Toronto.
All right, great. Round of applause for Nima, everybody.
Thank you.